Investors and traders, welcome to the channel Market Chat Pattern. Apologies for lack of videos the past week due to travel. In this video, we are going to take a look at the bond market. We will be mainly taking a look at the Treasury bond futures and also the Treasury note futures. This video is for educational purposes only, and it is not a financial advice. So guys, what we are looking at is the daily chart of the Treasury bond futures, also known as the long bond futures, because of the duration, which is 30 years. Bond market is a much bigger market than the stock market, and in particular, the Treasury note market is several times bigger. It's actually bigger than the 30-year bond futures market as well. So that's why it's really important to take a look at these markets, because these are way more sensitive to the interest rate movements, and in fact, quite a times they foretell what the market is expecting in terms of interest rate movements, and a movement in these asset classes could actually then guide us to evaluate how the stock prices might behave. So this is why in this segment we like to take a look at the bond market. So what we are looking at is the Treasury bond futures daily chart, and here the last video which we had done, I'm not going to go into the details of the exact pattern formations in this video. I'll try to keep it short. We were looking at the concept of the bearish symmetry, which we really like to do in this on our channel here. And what we made a note of was that the bearish symmetry was actually still in play, and that had kept the rally in a not going further than it had last month. And also where the rally seems to have kind of fizzled through is a combination or a confluence of two key Fibonacci ratios, the Fibonacci ratio being the 38.2% retracement, and also the 50% retracement coming close by. So the 38.2% retracement is coming from this high above here, and the 50% is from this swing high here, and they are in a pretty close proximity. And what we can see is, in fact, the price has been capped so far. Now, and this 38.2% Fibonacci retracement at the 133.31 level has proved to be pretty strong resistance so far. What I am also highlighting is this pattern formation highlighted in this yellow segment here. And in this segment, what this pattern is actually illustrating is a very important support coming in at around 127.02. This is where the price closed pretty much around this area, and the reason it is a very important pattern formation to watch is because of the two things. Number one, we have the 61.8% Fibonacci retracement come in from this low here. So let me try to highlight it for you. So that's 61.8% Fibonacci retracement, and also we have this ABCD formation. So let me actually write it for you. So let's make it A, B, C, and finally the D point. Right here, I'll just write it like this. So this is the one-to-one price projection ABCD coming right at a level of 61.8% Fibonacci retracement. Price, it's really important that price actually holds this level around here, and if the price is likely to actually continue to rally, this is the spot we'll be looking and watching really closely for it to actually turn around and begin to move higher. If the price actually breaks this low, particularly on two daily closing basis, then the chances increase for the price to move lower, in fact much lower, which would imply the interest rate will actually be going higher. and which is not going to be too good in news for the stock market as well, because of the interest rates going higher. It's likely to hit tech stocks in particular, because of the need for financing and to finance the debt service costs are going to go higher if the interest rates begin to move higher. So this is what we are watching really, really closely. Um, if the price is likely to turn around from here, this is the level which we are watching, 127.07, because of this ABCD 1-to-1 formation coming right at the 61.8% Fibonacci retracement. If the price breaks below on two consecutive daily closing basis, the chances increase for the price to move much lower. Let's take a look at the ZN. This is the Treasury note market. Here again, the bearish symmetry is again still in play. Let me actually try to zoom it a little bit here. So here we go. So you can see each time the market actually tried to rally, in fact, in some cases for quite a few months, the 38.2% Fibonacci retracement is not able to get above that. So 382 retracement, strong resistance, price moves lower. Here, price begins to rally again. 38.2% Fibonacci retracement, it moves lower, and then this is the highest rally it has had in this swing low, moving lower. And look where it is now. The price actually, here is the bearish symmetry coming up to this point. Then we have a confluence of 61.8% Fibonacci retracement and 38.2% Fibonacci retracement coming here in a close proximity. Here you can see that 61.8%, 38.2% Fibonacci retracement, and also the bearish symmetry, and the price is not able to move higher, is not able to take that resistance level to the upside. And in comparison to the bond futures market that we looked at, the Treasury long bond futures, it was making an ABCD formation. Here the 1-to-1, the price has already seems to have broken this and moving towards the 61.8% Fibonacci retracement, which should provide a strong support level. However, if this market begins to close lower on two closing bases, then that will be an indication that perhaps the prices are likely to move much lower, which would have an implication of higher interest rates, because the in bonds, the price and the yield, they are inversely related. If the price is moving higher, the yields are falling, and vice versa. If the price is moving lower, the yields are in fact rising, and this would have implications on other asset classes, other risky asset classes, such as the stocks, and in particular those stocks which require quite a lot of financing to run their operations. Their refinancing costs are likely to go higher because of interest rates moving higher. This would mean that their costs are going higher, which would have an impact on their earnings, cash flow, etc., etc. And this is why we need to really pay close attention to what's happening in the interest rate markets, because overall it has an impact. So guys, thank you very much for watching the video. If you like our analysis, how we look at the patterns, formations, Fibonacci ratios, confluence levels, where these come together to give us support and resistance level. And if you like the way we are doing this technical analysis, please do subscribe to the channel. If you found this video of educational value, please do click the like button. That way it just indicates to me that people do find value in these videos, and it keeps on encouraging me to bring these videos out for you guys. Thank you very much. Good luck and good trading.